This is our Forex blog for February 8th, 2012. And like most days, we want to buy the strongest currencies versus the weak and sell the weakest ones versus the strong. We statistically compare each currency to all the rest of them, and we also do it on multiple time frames and using multiple different tools. The histogram on the top is made up of 5 of our best statistical tools. 3 measure the direction, and 2 measure the intensity of the direction. And so you can see the dollar is extremely weak. Anything at and above the 80 line, dotted white line, is extremely weak. Underneath that we have the daily trend, the weekly trend, the monthly trend. So the yen's weaker than the dollar, but they're both weak today. If you had your preference and you're only going to trade one currency, if you have a small account, then always try to pick the one that's weakest or has the most current weakness. You can see the dollar went weak at midnight, but before that, for the last couple hours, it was strong. The yen, on the other hand, was weak. One thing to keep in mind, though, is trends don't go one way forever. So if you see the yen extremely weak for 3 to 5 hours, I wouldn't expect more than maybe another hour or 2 of weakness before you get a little bit of a counter trend. You can see that happen in the yen more so than the dollar. So trends don't go one way too long before they have a little bit of a pullback. Once the pullback stops, usually the trend continues. But you can see the euro was very strong today. Daily trends up, weekly trends up, and even monthly trends shifted up at 1. The Australian is strong, and the New Zealand is strong, and they both have the strongest longer-term weekly and monthly trend of all of them. So that being said, you want to look and focus on buying the euro-yen, to a lesser extent the euro-dollar. Let's look at those first. One thing to keep in mind is our upper containment bands tend to be an area where price trends, can reverse. Also notice this dark gray line up here. This is a Fibonacci profit target I did last night. I spent about 30 minutes, 35, 40 minutes each night, so you don't have to find areas of very high probability, likely maximum high or minimum low. And so in this case, starting the midnight time frame right here, you buy this breakout, a little hour sideways rectangle, and you can see the Fibonacci profit target up 44 is an excellent place to get out. That's a 34 pip win. Explosive trend on the way up. You then draw your trend lines over the bar's high, and when they break, you go long again. You can see the trailing stop got you out pretty much at break even. Figure maybe 2 or 3 pip loss, or maybe 5. And it comes down again to the lows. You have a little mini double bottom right here. Notice the momentum to the upside is much more than the weakness on the down moves. Typically, I will give it another shot to see if it can bust through the high here. And it goes up. We have a big counter trend signal right here. Usually those are at the end of the trends. And it comes up and double tops right at an area where I personally thought was going to be the maximum high of the day. And today I was right. So you can get out of this at 43. You're in again at, let's say, 23. So you made 20 pips on that, lost 5, and maybe made 30 on the previous one. Now, once you see a high being made and the upwards momentum kind of dying out, you can look for counter trend trades, especially after getting these huge counter trend signals like that. Usually the market's going to reverse. I usually kind of give it a few hours to kind of try to go higher, but when it fails right here to even go back up to the high, this is a pretty high probability trade. Only came down 15 pips. Comes back up and consolidates again. You might have went short here with your stop right above the high. And most of the time the market will make at least a 2-wave pullback, and the fib target right here is a great place to get out at 90. So if you had shorted at 07 or even right here when it kind of went sideways for a little bit, you have a nice 20 or so pip trade there. And look at the momentum on the way down compared to the momentum on the way back up. 1/3 of the strength, and we have a major reversal signal right here. Usually that's the end of the up move for the day. And so that being the case, you can draw your fibs on this entire move down. And usually somewhere between the 50 and 62% retracement is a good place to go short. Put your stop a pip or 2 above here to be safe so the noise of the market doesn't get you out. And I probably would have went short right here around 09 when it started going down. The bars went red. And you can see it went all the way down to 74. So quite a few pips, comes back up. I don't know if I personally would have sold this because it looks like the upwards momentum might be trying to push up higher again, but it came down again. Let's look at the euro dollar, which was also weak earlier in the day. This one, I would have probably preferred this myself just because it wasn't so high up compared to the euro yen. This one had pulled back a little bit. Here's the upper containment bands, went sideways, broke out right here. This is my first profit target, and it kind of went sideways there. I would have got out of half the trade here, in at 50, out at 70, made 20 pips on the first half. And look at how close it is to the upper containment band, 86. We have some counter trend signals right here. Usually that's the end of the move. And I like to wait for at least a 15 pip pullback. So a lot of traders I see get into losing trades because they wait for like a little 10 pip pullback right here. Maybe they went long right here. I like to wait for a little bit bigger pullback. You can see it went sideways, another 2 bars sideways right here. I'm going to go long here at 65. When it comes up to the high, and only 1 bar had extreme strength, less strength than before, and then strength kind of falls off, I'm going to get out right here just because, usually double tops are the end of the move, and you're not up that many pips, maybe 15. You want to get out of the trade. One of our systems is Elliott two-wave pullback, and that is wait for a pullback and then wait for the first or second fib target to get hit and wait for it to go above those bars. In this case, we have the hourly moving average right here and another Fibonacci retracement level. So I'm going to probably go long right here at 59, and it comes back up. And notice there's just not that much strength. So myself personally, when it comes right back up to the highs, I'm going to get out somewhere up here at 79 or so for a 20 pip win. And that's the only trades I would have taken in the euro dollar. Let's go back to the currency meter. Remember what I said at the beginning of the Forex blog. After anywhere from 5 to 10 or 12 hours, usually you're going to get a counter trend move, and it can be very violent counter trend move. So when you see some strength right here coming in, and you can see the weakness moves are less than the strength, usually that strength is going to continue. So you could be looking for another buy here at 830. The pound was the weakest one at that point. So coming up to 830, the pound yen was a high probability one to sell. And you can clearly see on the chart the same exact thing. Notice the Fibonacci profit target levels up there. I nailed the high on this one as well. We draw our fibs of this move down. And again, I like to short or buy at the 50 to 62%. So this came really close to the 50, dropped back down right here. I'm short at 24. I'd put my stop a little bit above here. I'd have a little wider stop. Because the longer term trend's up, I'm going to trade smaller lots just because of the lower odds. Here's a previous swing low, and it comes down here and just kind of goes sideways. So I'm going to get this trade around 95. Short around, let's just round down to 20. So for a nice 25 pip win. And it's debatable whether I would have personally taken this trade, but you can see anytime you have a momentum move down with very significantly less momentum in the opposite direction, usually that trend continues. And you had even more pronounced pattern here. Extreme weakness, the up move had very little strength. You go short right there with your stop right above here. And most of the time it's just going to work its way to the fib target. Keep in mind the longer term trend's up. So when it stalls at this first fib target right here, I wouldn't expect it to go any further down. I would have just been out of this at 68, short at 02. So that's a nice little 30 pip move. Here's what it looks like on the range chart, which in cases like this makes it easier to pull the trigger because you can see extreme weakness on the build. This is a build your own trend. I give you the option of using our best statistical tools on any time frames, and you can weight them however you want. And this only works live. It doesn't work historically. But you can see this nice little pullback right here with even more pronounced, less upwards momentum than before. And you can see that trailing stop got you out right here at 69, pretty much the same place I would have got out. We would have been short at 120 or so. So nice 30 pip win. And notice also on the move up, you can use our intelligent trailing stops designed for range charts as your entry and your exit. Entry, exit, with very good success. If you use these only in the direction of the momentum, earlier the momentum probably was to the upside. So you bought here, exited, bought here, exited, bought here, small profit, bought here, small profit. You can see the momentum's kind of dying. It's at the upper containment band and so forth. And if you want to do a counter trend trade when you feel that the upwards move is over or when it's above or upper white containment band, you can see it does a very good job of getting you out with almost every pip. And then it starts to go up. If you had bought right here at 31 and got out at 29, you only lost 2 pips plus your spread, and now you're trading in the opposite direction because the momentum is down. It's a pretty easy way of trading, especially for new traders. It tends to always have small losses, and it's going to have a lot of small losses during choppy markets, but when you trade the ones that are most trending, you're bound to get a few wins, and every once in a while you're going to get a 20 to 50 pip win, which is going to get rid of some of the choppy trading losses that you're going to have as well. And over time, you'll learn to kind of gauge when the market's likely to be choppy, when it's not, and you're just not going to trade during those hard to trade choppy times.